Ticker symbol DVR. 3x bear housing market made big moves on Thursday. In today's video, we are going to be going over a few different tickers that you guys wanted me to cover, whether it was on YouTube comments, in Discord, on Twitter, or wherever it was. I'm going to be covering a few stocks that I couldn't find the time to cover in today's video, and some of them I may actually hold, so make sure to tune in till the end of the video. All I ask you guys to do in return is hit the like button if you find value out of the video or you just enjoy watching. Hit that subscribe button, have post notifications on. Let's get into it. Hopefully you guys are all enjoying your weekend. The first stock we are going to be covering is ticker symbol DVR, Diverger Ltd. Now, just taking a look at the chart from a Google perspective, this is a solid thing to see. You never want to see some sort of dying company with it getting pushed into the floor. This is essentially what you like to see for any given ticker, and we're going to talk about why. Now, if you take a look at the 5-day trading volume, this thing is slowly starting to pick up more and more traders. The average sitting around 81,000 to 100,000. In the previous 5 days, it traded 309,000. The revenue and net profits have been increasing since 2019. You can see right here 59 million, 69 million, 91 million, and 125 million. So conservatively 30 million year over year, and their net profits as well 2.73, 1.48, so a slight decrease, and then a bigger bump up 2.5 and then 3.56 million. Not to mention the dividend. This is something that I wanted to cover as well. This is why I actually like this stock that was brought up to me. They are paying a 5.24% dividend yield, which is a beautiful yield to collect on a dividend, and they are only paying out a 47.3% dividend ratio. And you can see the dividend amount per share has been gradually increasing since 2018, and the shareholders have just got the largest dividend payout that they have ever seen holding this stock. Touching on the chart, we're sitting on the weekly time frame as well. This stock couldn't look better for a stock that trades very little volume. A lot of times you got to be very skeptical with stocks that trade low volume, have low float, but this one is looking really solid. It's making higher highs and higher lows. You can see a touch point here, and finally here, and we just got a spike up 17.32% on Friday, which is essentially why it was put on my radar. Their payout ratio is solid, their dividend yield is solid, their income statement is solid. You can take a look at their weekly performance down here and their yearly performance, also solid, and the technicals are a strong buy over here on TradingView. With that being said, lottery stocks, what would you be looking for? I would be looking for a rejection on this trend line, right? A touch point right around $1.10 before essentially getting this breakout in the near future, sometime between 2024 and 2025. Overall, long-term play, this thing actually looks good. I like this stock that was brought to my radar. This is the first stock. Let me know if you guys are jumping into this play. Now, the next one we're talking about is ticker symbol NWBO. Trading at $1 as well. So both of these somewhat a penny stock, sitting in that penny stock zone. I guess you could call it a penny stock if it's under $5. So this one's trading at $1 even, up 0.5% on Friday. And if you take a look back at the chart, it's sort of a failing company, but we recently have got this pop. So is it a turnaround? This is something that we're going to talk about based off of the fib levels. If this thing gets rejected on Monday, you could see it scale back down to around 70 cents. So just keep that in mind. Keep that in the back of your head as well. Now, their performance has looked solid over the past year, up 33%. Year to date up 27%, 6 months up 54%, 3 months up 63%, and if you bought it a month ago, you'd be up about 50% on your trade. And according to TradingView, this is a strong buy as well. However, there are a few things that I don't like about it, and we're going to talk about why. But Northwest Biotherapeutics is a biotech focused on developing a dendritic cell vaccine to fight cancer, but the company has faced financial challenges and relied on dilution to raise funds. Now, I like the company for what they're trying to do. Also, this is a very hard sector to trade and potentially go in long term. I think it's really risky, to say the least. Hopefully, they are done diluting to raise funds. They just hired another doctor on their board, which is the most recent news for this company. But you can see the short interest has slowly been rising. It is still pretty low, right around 4%. But if you take a look, December of 2022 is when they actually added this large spike. And if you go take a look at the chart, December of 2022 is right where we're trading at right now, and you can see that institutions don't think the stock is valued at $1 a share. They don't like it up here. They want to keep it under that dollar mark. Maybe they're trying to get it delisted. Who knows? But overall, this is a scary, scary place to be. Not only that, but their financials are decreasing, at least for their revenue. Their net income is up, their diluted EPS is up, net profit margin down, operating income up, and their net change in cash also down a good chunk, plus their cost of revenue. So not the prettiest sight to see. I personally would be on the fence with investing in this one. I do like the first one a little bit better. Now, Fubo, F-U-B-O. This one I do actually hold. According to TradingView, it's saying to sell, but I disagree. It's trading at $2.31, also making higher highs and higher lows, about to retest this level right around $2.20. I hold a small position in Fubo. A friend of mine really likes this play, and the only reason you saw this flash down, in my opinion, was because of a separate deal with Disney and another company trying to cut Fubo out of the deal. But I do see Fubo going higher, and it has a 1-year price target of $3.60, which is a 55% increase from where we're at now. But take that with a grain of salt and look at the financials. The financials are up year over year, all of them up 40% for revenue, 56% for net income, 70% for net profit, 42% for operating income, net change in cash up 63%, and the cost of revenue up about 23%. And on top of that, institutional ownership has been gradually increasing since March of 2021. So institutions see something that either we don't see, or they just think the stock is very, very undervalued. This stock has slowly been scaling up as Disney has been slowing down, and this could be the next play. Again, I do hold this. I don't plan on selling. And before we move on to the last stock that we have to talk about, guys, pop in the Discord if you're not in there, because I got some of these plays from Discord. I'm in there on the daily. We talk stocks all day long with 500 of the most amazing people. It's literally $1.99 a month. You guys will not regret it. Plus, we have options trading alerts in there. We post gains, post losses, and take some degen bets here and there. I also post my trades as soon as I take them. Also, guys, since it's the weekend, make sure to go do it. It takes 2 minutes out of your day. If you want up to 16 free stocks, a guaranteed Tesla or Google stock, and $50 sent to your account to trade with, all you have to do is press my link for Moomoo, sign up, and make a deposit of even $1. And once you do that, you're going to start earning benefits from there. So go do that. Both of those links are pinned in the top of comments and linked in the description down below. Now, the last ticker is NVOS, ticker symbol NVOS. Again, Nwbo Integrated Science Inc. I don't like the revenue being down, the net profit being down, the operating income being down on their most recent earnings. However, they are forecasting significant revenue growth across several different articles. You can see that this company is now about to see some significant growth over the horizon. So is this time to get into this play? Well, let's talk about it. This is making higher highs and higher lows like Fubo, like TTOO, like a few other plays as well. It's trading at 26 cents, another penny stock, and you can see a lot of buy volume coming in onto this play. 25 cents is that 382 fib level. The next one at the 0.5 is 30 cents, and we are trading right in the middle of that, right around 26 cents. If we break over 30, then of course you're looking at 35 to 36 cents, and then around 43 cents, and then the relative high right around 53 cents. If we break below 25 cents, watch 18 cents, and then the lows right around 0.0726. Overall, another riskier play. However, they are expecting significant growth. The chart is making higher highs and higher lows, and they may or may not be doing more buybacks in the near future, which is bullish for any company. Also, institutional ownership, 18 in total are long. Now, they're not long with a ton of shares, but 18 in total are long and 0 are short. So all of these institutions are long instead of short, even though the share amount isn't high. And take a look at when they loaded up between March and June of 2023. And you can see that is right around this level right here. With that being said, I think institutions know this is extremely undervalued under 18 cents, which is that 236 fib level that we talked about. Overall, this is the last play. Let me know if you're getting in DVR, NWBO, Fubo, or NVOS in the comments down below. Hopefully you guys enjoy your weekend. If you want to talk more with me, remember to get in the Discord. I love you all. Lottery Socks out.